Hello, everyone. Welcome to today's technical analysis lesson. I wanted to look at Marathon Digital because there's a lot of educational things going on here. So let's think about what a chart is, right? When we look at a chart, we're not looking at astrology or reading tea leaves, at least not if we're doing it correctly. What we're looking at is a graphical illustration of supply and demand dynamics and of psychology. Now, let's just talk about some of the psychological things we can see going on here. So we have a support level, we have a resistance level, we have a possible breakout, we have an ascending triangle, and we have a descending triangle. All right. Now, what is support? Well, when a market's going lower, it's because there's not enough buyers or demand to take in all the shares. So the sellers or the supply side have to offer their shares out at a discount, and this forces a downtrend. When we get to a support level, all of a sudden the tide turns. There's more than enough buyers to take in all the shares. And a lot of times when we get to support, we get a bounce like we did here and like we did here. And that's because the investors who want to buy start to get a feeling that there are other buyers around. That's why the price isn't going any lower. So they start to get worried that they're going to miss out, and they raise the prices that they're willing to pay, because if there's someone who's willing to pay a higher price than you or whoever, well, that's who the seller is going to go to. They're not going to go to someone who's paying a lower price than the highest price there is out there. So the buyers start to get worried that they're going to miss out, and they start to kind of jump in front of each other. So someone might say, all right, well, I bought it at 9.15, and someone else might come along and say, you know what, I really want to buy this. I'm getting anxious. I'm going to pay 9.20, and someone else says I'm going to pay 9.25, and someone else says I'm going to pay 9.30, and we get this snowball effect. So it's very frequent that when we get to a support level, we get a bounce. So we get to support, and if it looks like we're going to get a bounce, that's a good time to potentially get in for a trade. Now, a resistance level is a large group of investors who are looking to sell. If the market's going higher, it's because there's not enough supply to fill all of the demand. So the buyers are forced to pay higher prices, and this forces an uptrend. And now we have the exact opposite of the dynamic of bouncing off of support. It's selling off of resistance. Now there are sellers who want to sell around 9.15, but they start to get the feeling that there are other sellers around. That's why the price isn't going any higher. So they get worried that they're not going to be able to sell because someone is offering their shares at a lower price. So they start to reduce their prices. So someone might go from 9.15 to 9.10. The next person might go to 9.05. The next person might go to 9. And we get this snowball effect, right? So the snowball effect here of buyers jumping in front of each other pushes us up off of support. The snowball effect here of sellers undercutting each other has a sell off of resistance. So it's a very frequent thing that we see things reach resistance and not get through and then have these sell offs. Now, why would this level become resistance? Well, it's because of market psychology. There were investors who bought here who decided they made a mistake once the price goes lower, and they tell themselves that they want to get out. But however, they don't want to lose any money. So they tell themselves, all right, if this gets back up to my buying price, I'm going to sell it. If you have enough of these remorseful buyers placing sell orders at the level that was support, the level converts into resistance. So like I said, we're looking at psychology. Support turning into resistance is because of buyer's remorse. Stocks bouncing up off of support levels happens because we have, I guess, buyer anxiety. I guess you can call it. The buyers are getting more aggressive. See, here's the thing, right? If you watch the news or listen to whatever chat room or market guru, they try to assign every single little move in the market to some kind of fundamental reason. It's because of COVID or Ukraine or interest rates or whatever, whatever. The vast majority of the time, the move is just psychological. This didn't sell off here because any news came out. This sold off because sellers were just trying to get in front of each other, right? This didn't bounce here because of some kind of news. It was just the buyers were trying to get in front of each other. The vast majority of the time, things that the moves in the market are just based on investor perception and psychology. Now, we have a possible breakout yesterday. This is a breakout is when something gets above and stays above a resistance level. Now, it might take a couple days to see if it holds, but this tends to be a bullish thing, and it's not just because it's going higher, it's because it tells us that the investors who created the resistance with their sell orders have left the market. They've either canceled their orders or they finished their orders, but for whatever reason, the buyers overpowered the sellers. So regardless of what market it is, whether it's the stock market, crypto market, commodities markets, real estate market, when you take sellers off of the market, it forces the buyers to pay higher prices if they want to get shares in. So this could be this is a trend that could continue here. All right. So remember, it tells us that the sellers or the investors who created the resistance with their sell orders are out of the way. They finished their orders, they canceled their orders. We don't know, but regardless, they're out of the way. So you take supply off of a market and it sets the stage for the demand or the buyers to push the price higher. Now, when we get to a support level and you're wondering whether it's going to break, meaning the stock's going to trade below it, sometimes we can look into the past and get an idea if that's going to happen. Now, this is what we call a descending triangle type pattern. It's not perfect textbook one, but it illustrates the principles. When we have a peak, markets travel in valleys and peaks. They don't go in straight lines. So when we have a peak like this, a major peak that forms at a lower level than the last major peak, it tells us that as time is going by, the sellers are becoming more aggressive. We have buyers who are kind of content with hanging out down here around support, but we have sellers that are becoming more and more aggressive, meaning they are willing to accept lower prices. So when you have aggressive sellers, it sets the stage for the price to move lower. So that's what the essence of the descending triangle pattern is. You got the support level, which shows that the investors who want to buy are kind of just hanging out, and the lower peaks show us that the sellers are becoming more aggressive. So when you have aggressive sellers and complacent buyers, it sets the stage for the price to move lower. The ascending triangle is the exact opposite. We have these what we call higher lows. This shows that as time is going by, the investors who want to buy are getting more aggressive, meaning they're willing to pay higher prices. So you have sellers who are kind of just hanging out, right, willing to wait for the buyers to come to them. But at the same time, you have buyers who are getting more aggressive. They're getting more frustrated and worried they're going to miss out. So the descending triangle illustrates complacent buyers, aggressive sellers. The ascending triangle illustrates complacent sellers and aggressive buyers. So remember, just to recap, you need to look at all charts through the prism of what does it tell us about supply and demand, and what does it tell us about investor psychology. All right, so hopefully that helps out, and I hope to see you soon. Thank you, everyone.